Virtual Swordsman here. It's December 5th, 2022. Quite a volatile market day today. Flavor of the day is negative. Commodities broadly down, some down quite a bit. Markets down, dollar up, bond yields up, crypto. Who cares? Yeah, it's like every other day. It's noise. I mean, I didn't check the market for 5 hours around that. I know gold and silver opened up during the night, and now they're down. So I mean, that's I don't know, in silver maybe a 5% swing from the top or something. It's like, who cares? But you know, everybody else cares, because that's what everyone is focused on. They see down today, and since nobody wants to have a downtrend ever in the portfolio or in any stock, they guess what tomorrow is going to bring. So if it's down today, they guess it's going to be down tomorrow, and if it's up today, they guess it's going to be up tomorrow. All noise. I don't care. I mean, I already see people talking about if this is a bear market rally, or win a bull market, or win a bear market. And yeah, I really don't care. I don't care if it's a bull market or a bear market. I just want to buy something that is cheap and it's gonna go up one day. That's all my focus is on. And from a valuation standpoint, just looking at the junior proxy, Magna Mining, we were here today. We were up here, I guess Friday. Small wigs. Yeah, big picture. This is where I'll be, let's say, getting off the train. If we go down here and then up here, I mean, I know Felix Zulauf expect gold to bottom in early 2023, next year. So let's say within, I don't know, 3-4 months, whatever. I mean, I have no idea if he's right. I don't really care if he's right. Bottom might be, I think the bottom is in. I mean, just looking at today, when I saw, paper prices in metals down, so I was, hoping for some volatility, because again, it's like volatility is the main use. I mean, most people get abused by it, meaning if it's down, they sell low. If it's up, they buy high. Again, everything is centered around short-term movements. If it's down today, I bet a lot of people are selling. They feel like risk off. I can't possibly own this cheap stock because it's down today. People don't want to own this stock today. More people want to buy than sell this stock today. They don't care if it's cheap. They don't even have a strategy. Everybody is trying to guess what price is going to do tomorrow or next week or next month. I mean, you can see that on Twitter. That's literally what most people focus on. So if you play that game, good luck to you. You probably won't make any money at all, because it's so chaotic and so volatile, and you'll end up making short-term decisions. And again, it's like, what can possibly be easier than just trying to have a sense of what the long-term value might be? I mean, just realizing where we are in this cycle is, pretty good enough. And like I've shown before, I mean, if you just drew a trend line like this, some kind of, mean for a trading sardine like Bear Creek Mining, I think every time price reached around this level, if you just held, in this example, Bear Creek, within 2 years, almost regardless of when you bought, you would be sitting at 100% profit. And that, 2 years. That would still be superb results for a 2-year time frame. But most people can't make any money, let alone 100% in this sector in, every 2 years. So the question is like, how do you really lose in this sector? I mean, if, again, this short says nothing about short term. This short says nothing about tomorrow or next week or next month. Maybe not even 6 months or a year. It says everything about 2 years, for example. So with that perspective, I mean, how can you lose in this sector? Just buy every crash bottom levels. Just wait, and make money. Buy every crash, wait and make money. Buy crash, make money. And again, it's like, could you be buying here? It went down, I don't know, 60. Who knows? Let's see. 70% still would have made money. Started buying here, down 72%, still would still have made money. Down 50% made money. Down 60% made money. Down 80%. Yeah, we're gonna make money. I mean, it's really child's play. When you zoom out. But everybody, it's like same people. 3 weeks ago, sure, we were in a bear. Miners go up 40%, some miners, in 2 weeks. Now they're sure we're in a bull. Now we have flush today. Oh, now it's a bear market rally. I mean, can fast forward that kind of mentality. Okay, if it's going down, you refuse to buy here. All of a sudden you want to buy here. Then we have a down day. And then you start thinking, maybe this is a bear market rally. So you sell here. I mean, what actually happened there? You bought after a short-term big move. And again, of course we're going to have corrections. I mean, if these... just think about it. If this was the short-term movement, if you don't expect any corrections, that means we're going like this. And we would have a 1,000% return in, I don't know what the date is, but it's like, let's say, what's the scale? Weeks. Let's say 1,000% in 1.5 months. I mean, do people expect that really? I guess so. So I mean, if some of these juniors go up 40% in 2 weeks, of course there's gonna be a correction. If they would go up 40% every 2 weeks, we would have a I don't know, an annual return of 10,000% more, probably, actually more. It would probably be closer to 100,000% or something. It's ridiculous to expect that. And this was actually, a fake rally. Okay. Sure enough, if you bought here, it's like, yeah, now we're in a bull, down. Oh, now I'm okay, now I can buy here, down. Whereas if you just bought this stock, for example, the lower it went. You'd made money every single time. More money the lower you bought. So in that case, who cares if we're in a bull or bear? All we know is sentiment always changes. And when the absolute highest returns are obviously when the short is extremely negative. If you bought here, certainly it wasn't a bull market. But you would have made the most money. This was certainly not a bull market here. But you would have made the most money. So who cares? I mean, if it's a bear market, the worse it gets, the more you buy. If it's a bull market, you hold, whatever. So it's like, but I see it all the time. It's like, are we in a bull market or bear? Who cares? Again, who cares? It's like, take Magna Mining. It's like, I have no idea where Magna Mining is going in the short term. It's up today. Might end up more up today or down today. I have no idea. It should already be a way higher. This shouldn't even have had this correction, but we're in a liquidity event, tax loss selling, or whatever. So you'll see a bunch of stuff that has nothing to do what the actual value of the companies are, or what the long-term perspective is, because the only no-brainer edge that I see is, first of all, sentiment, understanding where we are in the sentiment cycle, because this is good for 70 to 80% down, 200, 300, 400% up. If you just grasp this, it's like you're gonna end up making money unless you're a really bad stock picker. And of course, I mean, if you try to predict every move, this chart is meaningless. If you try to predict the two-year moves, this chart tells you everything basically. And in the case of Magna, okay, you have ex-FNX team, superb guys, had a $1 billion success before. A lot of skin in the game, smart money's in. Obviously, I mean, they want to basically redo FNX Mining. So, I mean, I'm assuming they're hoping for a $1 billion plus company. I mean, they pretty much want to be a mid-tier producer in nickel. And it's a very strategic asset nowadays. I mean, I think the second or one of two juniors with a feasibility study nickel project in the whole North America, and it's already cheap based on what they have, and they're gonna do a lot of work, and nothing can really, I mean, this is my fair value range just based on what they already have. So this is like the margin of safety as I see it. Then of course all of these catalysts, or any of these catalysts, can be positive. So the value might be actually going something like this. Who knows? But if this is like what I'm paying here, and there's like a small chance that anything can really, well, I mean, anything can happen, but it's like, okay, if the banked success is worth around here, and they are expert at creating value in Sudbury, they're probably going to be increasing value. So the longer these guys have time, the longer I hold this stock, I expect the more time passes, the higher the value is going to be for Magna, in my opinion. So again, it's like, if Magna is, as I see it, very cheap now, let's fast forward to, who knows when this is, May of next year. We're here. Stuff will have happened. Maybe value is up here then. This is the arbitrage I use. Or this is the only way to make, in my opinion, big money. Long-term perspective, or longer-term perspective, because it's like everybody's after a 10-bagger, but few seem to realize that 10-baggers are held. A 10-bagger doesn't just become a 10-bagger overnight. 10-baggers materialize if you hold the stock, let's say 2-3 years on average. So if you have 10 companies, one becomes a 10-bagger in 3 years and would pay for all the other companies. It wouldn't pay for all the other companies if they went to zero after 1 year or 2 years. But if you held that stock for 3 years, it would have paid for every other company. The only way to capture the alpha value creation skills of a top tier team is to hold the stock. Because the more time passes, the more value they will on average create, the more problems they will have solved, etc., etc. Those are good hodl stories. It's like Western Alaska. They're going to be very aggressive next year. So I'm assuming people are, again, like kind of front running that they will need money. Sure. But the grades in this water pump creek system looks to be so absurdly high that the price of silver, for example, doesn't really do much. Because it just means a bit higher or lower margins. And I'm assuming the margins will be really good. I think Joe Pekenbrock discussed the fact that, I mean, they expect pretty much to be producing silver at, I mean, that's forward-looking statements, but when you subtract the value you get from the zinc and the lead, they expect to have, pretty much producing silver for free. So who cares what, in that case, what silver price does? If it's up 10% or down 10% in a year or two, whatever, and actually they won't be producing for, I guess, more than 2-3 years. So it doesn't even matter what the silver price is a year from now. And overall, I don't expect it to matter a lot given the bonanza grades and what I like about stories like, Magna, for example, you can buy a more de-risked nickel PGM junior with a better management team. So this is the best nickel stock I know of. And it's like silver space, especially if we're talking, actual business value potential. There are not many silver juniors, especially in North America, with a system this big, or what could be, really a district scale opportunity, with these kinds of potential margins. So this is, a top tier silver junior, because there's no real juniors that have all this. You can buy you could buy Silvercrest Metals in Mexico. Of course, that's probably worth, I don't know, $1 to $2 billion. I'm not sure what the price is today. But that's what I'm hoping Western Alaska will become. Because Western Alaska is very much in the growth trajectory phase, and obviously Silvercrest is in the monetizing value, the value that has been created already. So again, it's like, who cares if price is at $3 or $2? Obviously, if their growth trajectory keeps up, the cheaper it gets. Obviously, if the case plays out, you can see how it changes here, the expected returns. It's just absurd how good it is or how profitable it can be to buy cheaper prices in intact high octane growth cases. And again, time is your friend here. They won't have drilled up. The goal is for end of 2023 to have drilled up around 120 million ounces of AG equivalent in the inferred category. Hopefully found another CRD trend, etc. So that's what I'm comparing. What price am I paying now? What is Western Alaska going to be worth a year from now? I think there's a good chance that there's going to be a huge discrepancy between the price we pay now to the value it will have in 1 year. And I could be off by a mile, and probably I expect a good return anyway. So again, who cares if we're in a gold or a bull or a bear market? If this turns out to be true, because I expect them to be able to raise the money and do the work, does it matter if silver is at 25 or, I don't know, $18? If they have 120 million ounces of bonanza grade high margin silver that could be pretty much potentially produced for free one day, will this look expensive or cheap? And still you have these wild swings on the way, but so far, case is intact. I see a growth trend. So I stories like this, I pretty much just buy every dip, and that's why, again, value shuffling. Let's say you have 10 different Western Alaska, one dip like this, but one dip like here. I could, or maybe one is up for whatever reason, I could sell that, buy some Western Alaska, and they would just keep on going like this, and then I can value shuffle between some positions. Because again, I have no idea where Western Alaska is going to trade one week, 1 month from now. But I have a pretty good sense that I think Western Alaska is going to trade way higher within a year or two. My goal is 50% per year in compounding. That would be here. So if Western Alaska reaches 3.85, again from here within a year, that is a good return for me from this level, and I expect it to, you know, possibly throw off a lot more. But everybody thinks that you have to be in the money all the time. That if you held it through this and this came, all of a sudden that was, you know, a big mistake not to sell. No, you would be up 1.76. You'd have added $1. That's a very good return. Very good return. And of course, if you always buy high, because now the trend is your friend, yeah, it sucks now. But if you always buy the dips, and let's say, again, you just hodl, it's like Snowline Gold went up a lot. I don't remember what it reached, maybe $4 or something. And people were screaming, you know, top is in all the way up. And then the actual top came in and it retraced some 40%. I was still in the green. Why? Because I held it all the way up. I didn't try to top pick, I don't try to bottom pick. But if you try to, again, always have the trend to be your friend, you probably, let's say, only buy here. Trend changes. Maybe you sell here. I have no idea. I have no idea. You probably sell here or here when it broke down, and then back up. Okay, you're buying down here. Oh, now it broke down. What are you gonna do? Again, short term, no edge whatsoever. That's what everybody's trying to guess, and everybody's gonna, again, you know, sell when they should be buying, and they're gonna be buying when they should be, you know, potentially selling. But if you're a hodler, you have to just be prepared for the fact that you're gonna sit at big gains in a short amount of time, and this is unsustainable because this can't go up straight like this and have 10,000% return in 4 months. That's not gonna happen. But the long-term average return is still good. If it goes up, let's say in this case 266%, and then it goes up or goes down even 66, and then it goes up and then down. I mean, again, the average is a good return because, like I said, I mean, my goal is 50% every year. And this, I mean, you can see the trend here. If you just draw a mean price here, I mean, the trend is up. But I understand it because, trust me, it feels pretty sucky in a way. I mean, at the peak of Snowline Gold, the recent all-time high a few months ago, my position was absurdly large. When that fell like, you know, 40%, that is a big hit. All of a sudden you see, you know, in let's say in a month, you gained a Lambo. Within 3 weeks after that, or let's say you gain 2 Lambos, and then a week after that, 1 Lambo is taken away from you. Of course, that's very mentally taxing because you're sitting there thinking, oh, if I just sold the top, if I just sold the top. So if you let that influence you, that you can't take, again, you should realize that these exponential moves are unsustainable. But I mean, again, it's like if you have rips like this, you can afford to have big dips, and you cannot, again, if you look for perfection, I think you're just gonna be led astray. Basically, I don't see many people who actually make any money on that department. It's like, again, perfectionism. Are we in a bull or a bear? I can never. I mean, oh, it would be very, I don't know. Embarrassing if I own a junior and we're actually in a bear market. It's like, who cares? Our goal, our only goal should be to have the best possible returns, let's say, or try to maximize our returns over the long term. That's the only long term. Long term. Long term does not mean we can never have a 50% correction, and it doesn't mean we have to pick every top. Long term returns. Again, like now, trend is down. Okay, trader might not buy that. Okay, let's say this is a break of the trend line again. No trader would buy that. So whatever. Okay, this actually bounced on. But is this gonna be a bad buy in the long term? No, I don't think so. I don't even think this is gonna be a bad buy. Like I showed in, I talked about IAU gold on K report quite recently, and I've been talking about IAU gold all the way down here, and I think I started talking, or I bought my first shares around, maybe actually around this level or here. I don't remember specifically, and I said on K report recently, I think it was around. Actually, I think it was around here. I said I think all buys in I-80 is going to be in the green one day. And you know, what was it? Last week we were up here. All buys ended up being in the green. But no trader is buying this or buying that or whatever. And everybody would say, hey, you made a big mistake. You bought up here, let's say, when the results were really good, but the stock went against you. So obviously that's a mistake. Okay, so is it really a mistake? If I just held it and had, okay, it's not a super return, obviously, but if you can compound the 15% every what's that, like 6 months, that's still very good results, actually. And obviously all the other buys have an even better compounding rate. So again, it's all a matter of perspective. I mean, everybody's screaming that if you bought here and we're down here, that was a mistake. Yeah, okay, but let's say you just hold it and we go up here and you have 275% return, whatever, in 2 years. So was this a mistake? No, everybody will say it was a mistake here. Or here, or here. All the way down, they will say it was a mistake. And all the way up here still, pretty much, since you're still in the red. But at the end of the day, so far, historically speaking, a buy here was always turned out very well if you just held it long enough. But everybody is short-term focused, and everybody judges their portfolio and how good they are at investing at short-term, recent past. Because I don't know how many have told me, it's like, yeah, you'd be pretty dumb to be buying all the way down, or oh, you don't even try to trade or whatever. I would assume that I have better returns than 99% of people. So I'm a living, that's why I only trust myself, really. I don't listen to traders, I don't really listen to chartists or anything. I just stick to my guns. I stick to buy cheap, preferably where you see a lot of value potential, and you don't even have to be right on everyone. I mean, again, if one turns into a 10 bagger in 2-3 years, that would have paid for the 9 other ones. If 2 turns out to be 10 baggers, all of a sudden you would have a pretty okay return. If 5 are flat, one's a 10 bagger, one's a 6 bagger, one's a 3 bagger, I mean, good returns. It's just people have way weird expectations. And of course now, I mean, I'm betting that there's people bitching right now in the IA80 room. Why? Because all of us, you know, all of a sudden you have a correction. And maybe it goes down here. I absolutely no idea. Still, I think the trend is up for I-80, for example, and it's like, depending on where you pick, I mean, if it goes down here, you would have a trend like this. This is super good compounding. Down here, I mean, if it stops there and goes up, I mean, even higher compounding rate, etc. But it's like, as soon as a stock is off its highs, all-time highs, regardless, I mean, people start bitching about, oh, you know, why is it going down? Yada yada. Okay, did you really expect this was going to compound at this rate forever? No, again, it's the, if you just have the well, okay, Western. I was going to show the Western Alaska, but who cares? I mean, right now it looks like the trend is something like, let's say this. That's up. I mean, again, last week, except maybe this spot here, except for that, all buys since IAU got listed would be in the green. You got bailed out by time since they created value. And again, nobody said it was a bull market down here, but this was still the best time to buy. So I mean, if again, now we're up here and people like, yeah, we might be in a bull market or a bear market. How much help is that? Let's say we are in a bull market, which won't be again known until, I mean, let's say a person isn't convinced it's a bull market. Maybe they're convinced that it's a bull market in, who knows, 3 months where everything is higher. So here they're comfortable buying I-80. Meanwhile, the ones who didn't care at all if this was a bull or bear market, let's say bought down here, he would be up 124% already. That's good for, you know, at least 2 years worth of really, really good returns. I mean, the market doesn't average 124% in 2 years. That you would be happy if you saw that in 5 years, let's say. So was this guy stupid for buying? Was the CEO stupid for averaging down in something you knew was really cheap, and you know the risks were to the upside, and then the risks to the upside materialized? No. So who cares if we're gonna go bull or bear? If a story is intact, they keep creating value. Doesn't really matter. Again, if Western Alaska or Snowline, whatever, if Snowline ends up with, you know, 30 million ounces on the books in 2 seasons or whatever, what does it matter if gold is still at 1800 or 1700 if they have the largest, you know, undeveloped 100% owned gold resource in North America? If the sentiment is the same and let's say the banked value has gone up 300%, the risks are going to be to the upside. And if we go into a bull in the meantime, you can maybe multiply that return by 2-3 times. Other news, Newfound Gold keeps hitting good intercept, this time from Keats North. This was the Keats West discovery, and like they did a video recently, pretty interesting. You saw both Quinton, Bob Moriarty, Colin, Eric Sprott, other geologists from the company talk about the recent discovery at Keats West, you know, the barn burner hole. I mean, and again, the important thing for that, which they pointed out, is like that was on the west side of the Appleton fault. This is Keats, Maine, right side, east side. This is the west side. So I mean, again, what? Not only is that a barn burner hole, I don't remember what was it. It was. I don't think they have it listed here, but it's like I don't remember, 45 grams per ton or even more over huge widths, something like that. Yeah, that's one news release, obviously. But it's like, what does that tell you? Okay, you have that thick bonanza stuff here on the west zone. I mean, like they talked about, that opens up the western part. So what's the most valuable tidbit in that news release? I mean, I would say, okay, obviously that, okay, you hit another wide bonanza zone, but it opened up the entire west side of the Appleton Fault. Appleton Fault Zone. So again, what does that news release say about the next 2 years worth of news releases? I mean, that was kind of a game changer. because again, one could say, who knows, maybe the potential doubled in this picture, if you know what I mean. So that's obviously worth something. Tectonic announces completion of inaugural field program at the Flat Gold project. Pretty big system. Soil anomaly is, I think it's like 3.8 kilometers times 600 meters. That's a huge footprint. Obviously, Tectonic has been doing well, and I kept talking about Tectonic ages ago. It's like, yeah, their Flat Gold project looks like one of those stories which would, I think I actually said in the forums, like I expect this to have quite an easy time to reach 60 million market cap without doing much work. I think we're close to 60 million actually. And we're not even in a high sentiment environment. We're still down here. So it's like, yeah, is it tempting to take a bit of profit? Sure. But it's like, I don't want to be, again, perfectionist, because if this turns out to be the real deal, which I said in a recent video, I mean, who knows? If this turns out to be a giant gold system and we go into a high sentiment environment, I mean, a 10 bagger is 600 million, and that's not even a stretch in a higher sentiment environment. So I think, I mean, theoretically there's like 10-20 bagger potential. And it was, in my opinion, a quite relatively easy multi-bagger, which it turned out to be. And that's what I said about Magna. I think this is a relatively easy, and they have all the bank success already. I mean, Tectonic, I thought, okay, when people appreciate how big this target is, it's probably gonna go up just based on awareness, let's say, and some hype from Snowline and yada yada, which turned out to be true. And what's another? Nevada King intercepts 3.19 grams per ton over 32 meters and 2.9 grams per ton over 28 meters, extending oxide gold mineralization a further 70 meters west on south side of Atlanta pit, drills into feeder structure hosting high grades. I think, I mean, the comments from the geologists, etc., I think are really good. Again, what is the most important parts is typically, okay, if you have make a discovery, obviously that says that, hey, if they keep drilling, we might be in for, I mean, as soon as a discovery is made, or a discovery hole is produced, that means there might be good, on average, news from that company, from that area, from that discovery for the next 4 years. Says a lot about the potential of the future news releases. And a lot of these comments that maybe people don't care so much about, because again, they look just at the great holes here. But if they talk about, oh, hey, we, drills into a feeder structure hosting higher grades, what does that mean? That might mean that, hey, if that's true, they're gonna, have even more high grade hits from a new zone. Again, front-running news releases that have yet to appear. And the long term, as time passes, long term becomes short term, and all of a sudden the ones who didn't care back here about all of this are going to be forced to care, because we're going to have a PA study completed. I think it's end of Q1 last I heard, so let's say around here, actually closer than I expected. Maybe that PA will suggest, hey, combine Shakespeare and Denison is, depending on what nickel price. I mean, at today's nickel prices, I think, it's going to be worth a lot. But let's say somewhere between 500 million and 1 billion, depending on some assumptions, etc. The enterprise value today of Magna is around 90 million. And if they make some discoveries, yada, 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 you know the drill. I mean, this PA study will be based on what is already known. And this fair value range is not 500 to 1 billion. That would be up here somewhere. That would actually be 500 million let's say that would be around here to here somewhere. So again, in my opinion, risks to the upside. And the resource they already have is not going anywhere, which means there's a hefty margin of safety right now, etc., etc. That's a superb risk-reward case, in my opinion. So we're simply front-running this stuff that people don't care about. So on that topic, it's like you see tax loss selling or a negative news release now that sentiment is against us. Okay, market is very good right now of punishing negative news. Yeah, okay. Probably over punish. It already might be starting at a too cheap level. So again, maybe there's just, let's say a negative news release comes out. It should, let's say it doesn't even draw down the current value more than where the share price is already at, so it shouldn't really go down, but it gets punished by minus 15-20%. All of a sudden a huge opportunity might have opened up. Again, short-term volatility. The market is of course right now going to punish immediately negative news, typically unfairly punish it, so again might be an opportunity opening up there, etc. So I mean, the short-term volatility and the short-term pricing, that's our weapon. That's our main weapon, because this is our goal. That we look at price today versus price 1-2 years from now, because nobody else is doing that. But they're very good at pricing in. I mean, if it goes down, a negative news comes out, news item comes out, they punish the stock, and everybody, yeah, okay, it's negative news, so it should go down. But it's like, yeah, but when we compare it to what let's say the cases in TECT, it's like, hey, this is way too cheap. It shouldn't really have gone down because those negative news were already priced in. I mean, that's an opportunity on a day when people might feel like, oh, this stock sucks. Why? How can you beat this market? It's unfair. Yada yada yada. That's how you beat everyone else. You use the price, Mr. Market's sentiment, short-term sentiment and pricing, and compare it to the long-term value. Because again, as time passes, more stuff is going to all of a sudden become short-term. I mean, let's fast forward. Let's say nickel prices stay at these levels. Magna Mining has announced a PEA of $500 to $1 billion net present value. They're set to go into toll milling production, hopefully a high margin. It's like, do you think it will trade at around 100 million? I don't think so. Is that a guarantee? No. It could be way more also. It could be lower, of course, but it's like we don't have to know the future. If we have just a solid discrepancy between price today and future base case value, that's all we need. And then again, as time passes and short-term becomes long-term becomes short-term, all the stuff that the market doesn't care about right now is gonna be in the minds of the short-term oriented investors. So we have used that patience arbitrage, let's say, and all of a sudden with time we might be sitting on 100-200% returns within 12 months, and that's superb results, etc., etc. Yeah, hope you got something out of this. Again, it's just I guess a reminder. It's like I haven't done much trading at all today. I don't really care. Again, volatility is, if you're full invested, I mean, volatility is the currency. So again, for example, I picked up some Western Alaska today, mostly because that's the one that was down 9%. And again, I think the story is intact. It's one of the best stories out there, I think. I mean, management with huge skin in the game, superb looking system. If they just keep drilling, my bet is that this might turn into a tier 1 silver asset, and if that happens, it's going to be worth a lot more than this. And if that's even half true, I expect to make money on that. So again, risk reward. If it fails, I'll lose money. If it turns out to be blue sky, maybe I'll make 10 to 20 times my money. If it turns into half blue sky, maybe I make 5 times my money over the next 2 years. And my bet is that the risks are to the upside. That's a pretty simple case. And none of that can come to pass unless I hold stock for 1 to 2 years. So there I see a great case. Short term, which people seem to be mostly interested in, I have no idea. I have no edge there. I have no idea if gold and silver is going to be down tomorrow and get people to sell, or if it's going to be up and get people to buy, or if it's going to crash or explode or whatever. If I'm right on the fundamentals, the risks are by definition going to be to the upside. And if we start at levels where it's almost impossible to be overpaying for juniors overall, that's even more skewed in my favor. Thanks for listening. Not investing advice. Assume I'm biased with any companies I talk about. Western Alaska is a sponsor. Nevada King 2. Newfound Gold as well. Magna Mining as well. I own Tectonic. I own all companies mentioned, I think, except Bear Creek Mining. And it's like, again, I don't share your losses or your profits, and do what feels right for you. I just explain how, like always, how I think is the only relatively straightforward to make good money in this sector over time. And if your time frame is less than 2 years, it's hard. I mean, the longer time frame you use, especially when we're down here, I think the odds just increase. So again, I don't allow myself to be a net seller down here. Up here, I will allow myself to be a net seller, at least in beta plays. But I typically stay with alpha plays. But down here, yes, I can certainly see. I mean, in the case of Bear Creek Mining, I mean, this was good for us, 77% pop. I mean, that's, again, good. So if you just increasingly bought, the cheaper it became. Yeah, you would already, at least if you average down, etc. I mean, obviously the best buy was here, best buy was here, best buy was here. So if we go down, what does that mean? Just become better buys. Just become better buys. If we go down, I mean, think about this. I know people hate downtrends, but I've been adding. I buy more shares every month, pretty much. So let's say this was the bottom, and we went like this today. So if I just kept on buying, sure, I wouldn't have a retracement really, but every additional money I put in would have, let's say, max 87% returns, and actually decreasing as share prices went higher, sentiment went higher. Since this wasn't the bottom and it actually went down, my future returns on every all dry powder deployed, the average expected returns, have just kept going up. So at the end of the day, I'm going to make more money because this wasn't the bottom. But most people see this action here as the reason why you can't make money. Why this sector sucks, and yeah, you can literally not make money. No, I'm going to make more money over time because this wasn't the bottom. So this is a blessing for me personally, because I think, again, all the dry powder I deploy now has probably around at least 200-300% expected returns over the next 2 years. up here might be 50%. So if I just added 5% to my portfolio over this, pretty much over a year, let's say, just 5% is going to mean that my when we reach this level, my portfolio is going to be worth a lot more than if we just went straight to that level. So I'm going to make more money because this sector went down so much. Thanks for listening. Hit the thumbs up button. Bye.